Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for November 18th, 2018. Before I get started on the analysis and things to look ahead to this next week, I got a couple housekeeping items I wanted to discuss. First and foremost, as I always mention, if you haven't joined ForexAnalytix, you should. It's $1 for 10 days. You can try us out, and once you do that, make sure you download the mobile app. Doesn't matter if you're using Google Play or the Apple Store. If you have an Android device or an Apple device, just you can download the app from there, and this way you can have all of our notifications or get notifications on all of our analysis when we do patterns in play, support resistance level breaches, breaking news. You want to get to the chat room, you can do all that from the mobile phone. So or an iPad, or some sort of tablet if you have one. Also, I wanted to mention that there are a few new things that we've added to our website, and if you want to look at our videos, our webinars that we've done already, playlists. You can see, our Bloomberg appearances, our week ahead videos that you're watching here. You want to see what interviews are coming up and what market professionals that we have joining in the following weeks. You can do it right here, and then also if you want to listen to past interviews as well. Also, we added a blog. Well, I take that back. We have always had our blog, but we're doing a chart of the day every single day. So make sure you come back and look at this. And this is all part of the free stuff that's not even included. And then obviously what's included with being a ForexAnalytix subscriber is a lot more than that. So anyway, just want to mention some of those new things that we've added and continue to add for our clients and even those of you that are considering it but haven't quite made it here yet. So now let's talk about this next week. First of all, this next week is going to be a shortened week for most of us. I say most of us because this is the Thanksgiving holiday week in the FX market. So Thursday and Friday are going to be very low liquidity, and there can be some big market moves during the holidays. I've been around during FX or trading the FX market during Thanksgiving holiday here in the US, and I've seen 300 pip moves in the euro blowing through major support or resistance levels. So I have seen massive volatility in the past. Also, I've seen just like the last couple years where we have 30 pip trading ranges in the euro dollar throughout the course of the day. So you can see some stop runs in the market, and the thing I like to point out is just be a little careful when you're trading during the holidays. Now for us, we will be broadcasting Monday, Tuesday, Wednesday, doing our face webinars. Paul Franco will be doing his European crossover, which is only for our subscribers. So if you're our ForexAnalytix subscriber, you can listen into that, but he will only be broadcasting Monday, Tuesday, Wednesday. We will not be broadcasting Thursday and Friday of this week. So just letting you guys know that. And also, if you are a ForexAnalytix subscriber, Thursday and Friday will be very limited analysis. So unless something is moving, then if something is moving, like myself, for example, it may be the Thanksgiving holiday, but if something's moving, I'll come sit down at the computer and make sure I push out some analysis if it hadn't been done so already. But those are just some things that I wanted to mention before we talk about this week. Now, going into this week, I guess first and foremost, you gotta realize that the dollar went out on a weak note, okay? And if you look at like the weekly chart of the euro dollar, look at this hammer that was created. Now, a lot of people look at this big, long-term head and shoulder pattern, but if you look at this chart, notice one thing that it's starting to lose as this long-term setup develops. It's losing its symmetry. That means when if you're looking at a head and shoulder pattern, the shoulders on each side of the head, the right shoulder has developed longer in time. So when you lose that symmetry, the risk of it not playing out becomes quite high. And there's been a lot of people that have looked at this chart and said, you know, there's a big head and shoulder pattern. I don't want to be long the dollar as a result. Well, look at the dollar and how it's performed. Now, one of the big things about the dollar right now, and one of the things about the euro, for example, is we had this false breakdown below 113, and we reversed and we closed at our highs. Now you can see we're approaching channel resistance, and the euro is at risk of moving higher. Now, over the weekend, I want to, for a moment, I want to stop here and say that Vice President Pence and it was in China, and he had really sparred with words regarding the China trade, you know, the trade war, and basically said we're not gonna bow down, and tariffs might even double unless China meets our demands. Those are some pretty strong words from the vice president. Now, typically, when you have a trade war, and what we've seen thus far is the dollar has strengthened as a result. So that that's kind of the risk here with the euro, because the euro went out on its highs. I have a feeling the dollar is going to be a little stronger at the open on Sunday. We should see the euro dollar down a little bit. We'll see the Aussie dollar down. We'll probably, well, the pound the pound closed the week on a fairly weak note. I mean, you look at the pound, you know, obviously with the Brexit, you know, risks and the potential, you know, no contest vote with Theresa May, the cable could very easily end up lower, because it was really underperformed at the weekend, you know, the end of the week this last week. So you know, I see how the dollar had performed, and you look at the dollar and the dollar index, and this is the dollar index right now. We had this false breakout here, and you know, we're approaching some support in the dollar after having this false breakout, but we are going to come into some support, namely, and let me get rid of this really quick. Let me just delete that fib level. There's a 38% retracement coming into play and a trend line right down here at 96 on the dollar index. And that's a big deal to me. And yes, we played the dollar reversal pretty well. I know with the ForexAnalytix community, a lot of us have. You know, we had the divergent relative strength. We had 120. This is a just so you guys can see it. Let me put it out here really quick. This was 127% extension of this last move down. The one that you can see here in August, 127% extension, rejection at the 618 reversal. It played in, we played it pretty well, but if you have dollar short exposure, you got to realize that, like I said, there were some pretty strong words said over the weekend, and we do have some support coming up now. So you got to be a little careful with the dollar, and knowing it's a shortened week too. You know, just be a little careful. I do think if we get below 96 cents, that is going to be fairly bearish, the dollar index. Now, speaking of the Aussie and the Kiwi, if you take a look at both of these currencies, they have actually held up relatively well. And you can see the Aussie dollar came out of this down channel. We pivoted off the 72-cent level, and currently we are, if you take this, you know, long-term chart here, we're currently above the 28% retracement, closing in on the 38% retracement. So, you know, it looks pretty bullish right now. So even if we get a dip in the Aussie, like let's say this week we dip below 73 cents and close in on 72 cents, we're probably going to find some buyers here. And the same can be said for the Kiwi. Now, these are both currencies that are going to be a little bit more sensitive to the, you know, you know, trade talks between, or trade sparring of words, maybe against, you know, against China from the U.S. Regardless, the Kiwi and the Aussie might be a little bit more sensitive to that, so we could see a little bit of a pullback in both of these. Kiwi as well, you can see we are above the 38% retracement. We're approaching the 50% retracement. We've got a big resistance zone that we're coming into. You can see all of this resistance through here, and it's noted by the blue dotted line, the thick red barrier here. It's a pretty big resistance zone. So us pulling back, at the open or early in the week is possible, but I think that the Kiwi will find buyers on dips, and I have to admit, both the Kiwi and the Aussie have performed really, really, really well in light of the trade war that we've seen. Now, I also have to mention that almost a month ago, I read an analysis report from the RBA, and they expected the Aussie might perform abnormally well in light of a China-U.S. prolonged trade war, which I found interesting. And you can see how well the Aussie has performed, and it's actually strengthened quite a bit in the last few weeks. So again, the knee-jerk reaction might be a weaker Aussie, weaker Kiwi right at the open on Sunday, but don't be surprised if the Aussie and the Kiwi get gobbled up on a dip, because in my opinion they look like they're trying to turn the corner and move higher now. One last currency pair I really wanted to bring to your attention is, well, actually let me stop here for a second and let me bring up crude oil. Let's go over to crude. It's right here. Actually, there's a couple things I want to talk about. So we're not done yet. Take a look at crude. Crude is pulling back, and we're obviously we've pulled back to some pretty key support here. 38% retracement on a weekly basis. If you go back to the daily chart, this 618, which it's hard to see in this particular chart, but you can see it's actually right there. But let me pull up crude oil really fast. I want to show you something. Now, this was part of our one of the charts of the day on our blog that I was mentioning a little earlier, but you'll notice that we pulled back to the 618 of the 2017 low to the recent high. And keep in mind that that high was registered in the end of September, beginning of October. I mean, we've come down this far in just a month and a half. We pulled back a 618 of 2-year of 2 years worth of price action. Okay, 2017 low, 2018 high, 618. The daily chart got extremely oversold. We were reaching oversold levels we haven't seen since 2012, I think. Yeah, back here 2012. So crude oil could bounce. So as a result, if crude oil continues to bounce, and I don't think we're out of the woods yet. If you're bearish crude, I mean, seeing some sort of rally to sell into seems logical to me. Maybe a rally to 60 or 62, 64. That's gonna find some sellers as we get a bounce. But if we do get a bounce, as a result, you might actually see the dollar Canadian. Let me pull up the dollar Canadian here. The dollar Canadian, which is reversed off a 78% retracement, we could break back below 31 and quite possibly come back to the 200-day moving average near or just below 130. So the dollar Canadian is finally, and it's been extremely resilient up here, and I think a lot of the reasons why the dollar Canadian has been so resilient, meaning it's been stronger, weaker Canadian dollar, stronger US dollar, is because crude oil has been so weak. But if crude actually manages to bounce, and we do see crude bounce back to 60 or a little bit higher, or again, we're at 56. If we can bounce back to 60, 62, the dollar Canadian could very easily come back down to the 200-day moving average, back towards 130. So keep an eye on the dollar Canadian. I think the dollar Canadian is worth looking at now. It's been stubbornly strong because crude oil has been so weak, but that could quite possibly change. One last thing, and I told you there's one last thing I wanted to mention. Jeez, this video is going on way too long. Take a look at gold. Where is gold? I have to find it. There it is. Take a look at gold. Gold actually has had a nice bounce off the lows. We had this trendline support. It came into play, and gold didn't match a new low when the dollar index was making a new trend high. So gold is at risk, in my opinion, to come back towards 1240. Remember, 1240 was a really key resistance a few weeks ago. And the reason why that's such big resistance back here at 1240 is because that was a breakdown point back this summer. And if you go all the way back to the end of 2017, it was also a low back here. So 1240, 1240, 1240. It's going to be do or die time if the gold market continues to rally towards 1240, but I think that's a big deal. And if we break above 1240, then you're going to probably see strength in the yen or a breakdown in the dollar yen. And by the way, the dollar yen is, you know, challenging a pretty significant trend line support. I've been mentioning every morning on the face webinars, you got to watch this 113 level in the dollar yen. We are trading below it now. As this China U.S. trade war continues to pick up, and it doesn't look like it's going to abate anytime in the near future, that could keep gold stronger, the yen stronger, which means the dollar yen could be a little weaker, or all the other yen pairs as well. Anyway, guys and gals, this video has gone on way too long. I could talk probably another 30 minutes without any issues, but I don't want to lose your attention either. So, you know, I want you to enjoy it this week. It is a short week. Remember, there's it's going to be kind of thin liquidity on Thursday and Friday. So you guys have a great holiday week and a shortened week. And thank you so much for listening in today. My name is Blake Morrow, and if you like this video, make sure you click the thumbs up button on the YouTube video and subscribe to our channel. And we'll see you soon. Have a great week, a great trading week.